I know people talk about investing out of their retirement account, but that doesn't really create the cash flow because you're required to keep those funds in there unless you want to be hit with penalties and pulling the funds out of your retirement account too early from it there. So depending on the type of retirement account that you have, seeing if you can loan yourself out of that retirement account in order to invest, just make sure you have a plan on how to pay it back with interest and according to the terms of the retirement account. So whatever you're going to invest into, ensure that the returns are larger than your interest that you're paying back to your retirement account there.
Welcome to the Nicholas Brown Podcast, a podcast talk show about real estate investing, business leadership, and personal development. Each week, we explore current real-life case studies about how to build financial independence through investing in real estate to build your personal portfolio through passive income models, along with interviews from the top business leaders and personal development leaders. Now, here's your host, Nicholas Brown.
Welcome to the show, ladies and gentlemen. This is season 3, and this is episode 1 of season 3. Of many to go, though. But this season, ladies and gentlemen, we're gonna deal with what we call cash flow real estate. Normally, as you see on my podcast or anything, if you're listening or watching on me, I deal with business development and leadership and real estate. So, but this season here, we're gonna talk about cash flow. We're just gonna go that flow, and we're gonna go about how to build your teams and get educated. So that's the key too, because if you've been watching, if you've been on my YouTube or been listening to my podcast, you've been seeing I've been gravitating and been advertising to people that got the 401ks, retirement income, people my demographics, 40 and up. I'm in the 50s though, but I'm just saying the 40s and up where they don't have cash flow. Or you want to learn, or they don't want to get you may want to get into real estate, but you don't want to do the hands-on, but you would love to share, or you would love to do what we call the three factor: time, talent, treasure. You may have the you may not have the time, but you may have the treasure, 401k, but you may not have the talent. That's where we come into place on there, where you got a network. That's the purpose of the book and everything. But anyhow, I'm gonna get this short. I'm gonna do a quick biography about this person here, and then we're gonna get straight to the show, ladies and gentlemen. Excited about this guy. I got some questions. I know you got some questions after that also. Make sure you guys subscribe. And here we go. I'm gonna read the quick and short and simple bio. Better yet, I'm just going to do this. My guest today is CPA Larry Pendleton. He's in Virginia, state of Virginia, correct?
Yes, sir.
Okay, we're going to do this. Welcome to the show, sir. And tell us a quick shout out about yourself, because we're going to make this short and simple. And ladies and gentlemen, make sure you subscribe, because we're going to get to another episode. I just want you guys to learn about Mr. Pendleton. How you doing today, sir?
I appreciate it, Nick, man. Thanks for having me on your podcast. So looking forward to adding value where I can. Larry Pendleton, CPA, as you mentioned, out of Virginia, born and raised here. I've been a CPA for over a decade now. My firm, PC Financial Services, where we primarily service professionals in real estate and those interested in getting into real estate investing as a means of saving on taxes, because our mission is to help people achieve financial freedom through real estate investing and tax strategies. And there's other aspects to it, but those are the two areas that we're planting our flag at to help people achieve their goals.
Okay, awesome. So basically, you work with beginners, medium, and experience in real estate. That's your okay. Real estate investors.
Those are just starters. Those real estate agents, brokers, people with property, people don't have any properties, or people who have notes. So if you're touching real estate, or you're involved with it, or just have an interest, we're here to help where we can.
Okay, what got you into becoming a CPA? What got you in that field? You're a numbers guy?
Yeah, I've been a numbers guy basically all my life. My parents have stories about me wanting to be a banker at one point.
Okay,
before I turned 10. And then just seeing the opportunity to help my dad with his HVAC business, and balancing the books aspect of it. So it's just always been an interest of mine. Like, I didn't know what the term accounting was until I got to high school, but it was something I was already always involved with. And then once I got to college and got into the to the corporate world, I started to know that there was a need for a lot of people which kind of drove me to start my own firm to kind of help those like, hey, like this is a struggle. Like no matter how much money you're making, where you're from, everyone has struggled just getting their numbers together as well as saving on taxes.
Okay, okay, okay. What got you into real estate? Because was it
Uh,
always your goal, or what got you to become an investor besides being a CPA?
Actually, it was my partner Terry on Conyers, Class A contractor. So he was already in real estate before we started PC Financials together. And I always kind of knew the benefits of real estate when it came to savings, but never that limited mindset. I never thought I could be a real estate investor myself.
Hmm.
That's why it was important to me to be surrounded by the right people and be connected to him was a huge benefit in my life as a whole, not just in real estate. So he was kind of had too much on his plate. He had one property that he said I could take over, ran the numbers and connect me to an agent, a property manager to kind of help get things going from there, and took that one single family townhome and just started growing from there to multifamily and uh, private note investing
Okay,
and so forth from there. So it was a huge plus for us, especially over these past 6-7 years, just kind
okay.
of growing our own portfolio. So when we say we work with investors, because we're also investors
You
ourselves.
you out there also. You guys had the experience. You're hands on. Okay. So,
Yep.
ladies and gentlemen, if you're listening on a podcast or if you're watching this too, that's where I want to stress that, as I said before, time, talent, treasure. His partner had reached out to him. He didn't have he had the time to help his partner, but at the same time, he was getting experience. And his partner had talent, but both of you guys had time and talent to switch over and help each other to get to meet your goals, correct? Hey, listeners, interested in retirement planning? Whether you've got a 401k, no savings at all, or you're somewhere in between, we've got you covered. Subscribe to our retirement planning newsletter for expert tips and insights. Secure your future today. Click the link in the show notes.
Yes, sir.
So that's why I want to stress that point also, ladies and gentlemen. So you guys are listening in, or say the purpose of this video and this podcast is to focus on people that got 401k, or you new to real estate and just want to learn. Just get out there because it's cash flow. If you can watch this, if you're watching on YouTube or you see this video, you see that shirt, ladies and gentlemen, says cash flow is a mantra. That's the exact method. That's our mindset. You want cash flow. Some of you guys are not have low 401k or have no income coming in at all. That's the purpose of these type of episodes, to educate you, and don't force anything, and feel free to reach out to Larry. Matter of fact, here's a quick shout out. How can they get in contact with you, Larry?
Yeah, I'm on LinkedIn. I'm on Instagram, on Facebook, Larry Pendleton CPA. Pretty sure the link to my personal page will show up in the show notes there, but people can also email me at info@pcfsva.com.
Okay.
But those would be the best ways to reach out and schedule an intro call or a consultation session, just based on what your needs are.
Because the reason why I asked that, ladies and gentlemen, he's nationwide. He's all across the states, correct?
Yes, sir.
That's where I want to plug that. So make sure you guys, you'll see it in the description. Always reach out to me. You'll see how to get in contact you. If you're watching on YouTube, you'll see that plug also. So tell us this. What's this? It's on August. I want some tips on there. If someone was new to real estate, or if I was new to real estate, I got a 401k and I got some income from a retirement, got good credit and all. What would you suggest for how would I approach you, or what would be your suggestions to
First
start
and
out?
foremost, like, what's that person's investment? Like, what's your goal? First and foremost, because I mean, anyone can
Cash
just come
flow.
out.
Cash
Yeah.
flow. I
So
heard about real estate.
if the goal is cash flow, then it's okay. How do we? Um, I know people talk about investing out of their retirement account, but that doesn't really create the cash flow because you're required to keep those funds in there unless you want to be hit with penalties and pulling the funds out of your retirement account too early from it there. So depending on the type of retirement account that you have, seeing if you can loan yourself out of that retirement account in order to invest, just make sure you have a plan on how to pay it back with interest and according to the terms of the retirement account. So whatever you're going to invest into, okay, ensure that the returns are larger than your interest that you're paying back into your to your retirement account there. So people do that with HELOCs as well if they're pulling equity out of their home or any other type, or especially if they're raising capital from other people as well. It's the same concept. It's just knowing what the rate of return need to be for you to get the cash flow that you're looking for. So that's your mindset is cash flow. You're not just trying to build up your retirement account. That's your avenue there if you're brand new into real estate.
Okay. Here's another question. Based on your experience and all, multifamily, you do development. What do I guess I know the answer to it. It depends on the client, what their needs are. So, but I gotta do the question though there. What would you suggest? Or how did you start out? Did you start out buying apartments? How
I
did you
started
start
off
out?
as a single family rentals. Was a, then shifted towards like single family flips.
There's a reason why?
I think more so like because that's typically the roadmap that most people are kind of presenting. Like you guys start small, you'll do one property here, one property there, and you're kind of maxing out your own income. So it's like if I would have known if I could have jumped straight into larger multifamily or new construction or just straight into notes, like I would have just kind of done that as well. But like I said, there's a lot of trials and there's always going to be risk. There's always trials and
Right,
tribulations. But it's like okay, but the type of investing that would have worked for me because I'm not going to be out in the field or at
right,
he's doing it like that's not my skill set. That's not what I'm great at. I
exactly.
find people who great at those things, property management, construction, all that to handle that piece of it. And I stay focused on what they brought me in for was okay, let's manage the books, let's find the tax strategies, let's underwrite the deals, make sure the numbers work, and go from there. So that's why I didn't really kind of jump in because I just didn't know. So
Sure.
uh, I mean, I think people are listening to podcasts like this, like you're kind of far further along than where I was when I first started 8 years ago, and just kind of trying to slowly build up, or just kind of with small stuff. Which you gotta know what your risk tolerance is, as well. But that's where having a good team in place where you can attack bigger deals because you have to, because everyone you want to make sure everybody eats at the table.
What's going on, family? Johnny Lottom here, the military CEO, and you're rocking with the best with the Nicholas Brown Show. Let's go.
And ladies and gentlemen, you can Google this young man. And I say young man because I'm up to date. We may not look young, but I'm a gentleman. See, I'm a gent. But the reason why I say that, Google him. But he's network. It's about networking also. Network. Get in those REI groups. Get online. Get in the Zoom. Go on LinkedIn. I met this gentleman. So, but network. Get with like-minded. Get educated. Am I correct? You still
Yeah.
network, go to real estate meetups, meetup.com, network, and you will find out, you'll know what fits for you. But most of you guys, as I said too, I stress this because this is a long term with me and Larry. I love the network. I'm gonna network with Larry and like-minded. This is long term. Most of you guys whether you're new to real estate or whether you're up in age from the 40s to 50, my demographics that draw attention to me, you don't have that income coming in, that 401k, or you have or the retirement, but you cannot retire by choice. It's all about the choices you want to make. And that's my point I was asking with Mr. Larry. So he said he would have went the opposite direction. If I was to start now, I want quick money. I want to get rich quick. When I say rich quick, I want to partner with Larry or like-minded one here where we can buy, fix, and sell. Write that off because he's in the team, CPA, or because I'm listening to his advice, whatever. But I want to continue to do that and put that money right back into my tax advantage systems. Am I correct? Where I get advice from my team member is a CPA, Larry, and we're steady networking, but I'm getting more choices than more problems when I'm coming close to retirement, ladies and gentlemen. Well, you could be 20 or 19. It's just up to you what you want to retire, but it's all about choices. You want to have choices. Most of you guys don't have choices. You got some problems. You got some problems that hit you. Because if you relying on those stocks, ladies and gentlemen, don't just rely on the stock. Yeah, they good, but real estate is something you see, you feel it touch your investment, okay? That's an example. Would you agree, sir? Oh, get your input. What's your input on that? What do you think? What's your perspective?
Yeah, I mean, I think the tangible aspect of it, but it's mainly it's what it's secured by. And
Mm-hmm.
like, especially people talk about like being the bank, whatever. Like, there's a reason why like you see mostly banks kind of investing into just notes or giving out notes because the note is secured by the property.
That's right. Right.
That's
Right.
the backing of it as
Right.
well. And it's not, and yes, the valuation of the property goes up and down, but the note is the note.
Right.
Whereas stocks, the valuations go up and down, but
Volatile. Yeah.
so you can actually like lose your investment. You can also, if you play the timing game of when to pull out, then okay, you actually have opportunity there. So like nothing wrong with stocks. It's just
Right.
you have to know what you're capable of keeping up with.
Right.
And if you're monitoring that yourself or have a trusted group of advisors, that's monitoring that stuff for you. You can be because you can turn out poorly in real estate as well, but
That's
that's
right.
because you may not have done the right due diligence or have the right people around you. But it's like, but at least it's something tangible that, like I said, that you can always kind of fall back on, like that. Like that's what I'm securing my capital by.
That's right. And real estate is forgiving business, as we say, old school. We say that because you can lose today and come back up in a very short amount of time. When I say lose, you may have lost on the deal, or you may, had a foreclosure back in 2008, my time, whatever. But you can come up very quickly in real estate. Real estate is a forgiving business compared to stocks. You cannot track that. I mean, people jumping off buildings for their stuff. You cannot. So you have to be careful with that. But that's why I love real estate, and I love private lending and creating notes because the property is secure for the notes, collateral. I'll call it collateral lending myself, and you can structure cash flow, monthly cash flow off the notes on there. That's the example that with Larry that he does. Remember, don't you deal with that also, or are you familiar with
Yep.
that? Okay,
Yeah,
great.
yeah, we're shifting more to that because, like I said, it's more of a passive, and it's somewhat a bit less volatile than actually like buying the property, like managing the property, managing tenants, and all that. Like I said, it's still, and we cut our teeth on that, and like I said, we've been somewhat successful with it. So I don't regret those the properties in the portfolio that we have. It's just now we're looking into different avenues, just seeing where other options are, especially as you grow, you're going to be surrounded by the people that's going to enlighten you on different things. Like I didn't realize even buying a note was even possible
Right,
like until recently. So okay, great. Like let's see how we can fix this in. I'd much rather put capital toward that, and then instead of dumping another however amount down payment in for another property, especially with the interest rates are going as
right.
of August 2023 today. So the things you just gotta keep in mind that is always shifting, but we have that control. You have the like I said, you have
Mm.
that know-how in order to shift and pivot instead of just sitting back and hoping things turn out a certain way.
Special announcement. Interested in retirement planning? Got a 401k? Or no savings at all? We've got you covered. Subscribe for expert tips and insights. Secure your future today. Click the link in the show notes. Control, control, control. That's why I stress that also. You got the 401ks, or you don't know that you have choices and control of your money. People are not aware of that. Do you get clients that have 401k or retirements where they want to get advice from you, and then eventually, they decide in time to take that step?
Yeah, they may even try to shift some funds into self-directing retirement account
Sure.
for 401k and then invest out of that. So they're kind of building the nest egg aspect of it while using some other funds to actually create cash flow as well. We have clients who have small businesses and helping them determine if a solo 401k works for them so they can put more money into the retirement account to get large deductions along the way, so they can take those after tax dollars and then reinvest that into something else as well. So yeah, we help clients with that, with how they want to utilize their retirement accounts in various ways.
Hey everybody, this is Nate Hare, Executive Director at Directed IRA, and you're watching the Nicholas Brown Podcast Show.
Okay, so we're about to wrap it up. And I appreciate your time, Larry. I got to get you back on another episode. I got to get you back. So, but I want to ask you this: what's if someone's new to investing or want to get investing, what would you advise? Or what tip would you? What's the first thing you advise?
Yeah, education really. Finding your purpose, because that's going to help. The education is going to allow you to figure out, okay, where do you want to go with this? Like, are you someone that wants to get their hands dirty and you want to do flips? Like, okay, like then that's something may want to get into. You want to just be passive and collect the proverbial mailbox money. Then okay, well now you need to kind of educate like how the proper way to do it, because always going to tie back into how you're educating yourself, and then how are you networking as well. So those would be the two key factors into this, because getting an education will involve networking. Like, it's kind of entwined with one another. You can sit here and try to learn everything yourself, but that's kind of the old school way of doing it. And like I say, it's you can only take on so much as one individual. Like,
That's right.
You may have mentioned before we got on the call, like you're more about multiplication than just addition. Was okay.
Right.
You bringing on one other person doesn't double what you do. It actually can quadruple what you can do, because y'all can kind of focus on multiple things at the same time, and share the risk, but also reap the reward together as well.
Special announcement. Interested in retirement planning? Got a 401k? Or no savings at all? We've got you covered. Subscribe for expert tips and insights. Secure your future today. Click the link below. Okay. As I always end with my podcast, you just made a point, ladies and gentlemen. Be responsible as an individual, but work as a team. That's the purpose of, compounding your efforts. I'm responsible. You can trust me for this year. I will get us to that. But work as a team, football, basketball, whatever. This is a team sport if you structure correct, or a team structure of business if you structure it that way too. But quick question, we're about to wrap this up. So I got to ask a question for real estate investors, people that experience in investing. What do you normally what would you advise for them, experienced investors, when they come to you for the tax CPA? What are you always getting? What type of question, or what should do first, or what's your advice?
Make sure your books are in order. Like I said, we don't do bookkeeping in house anymore, but it's if you want to really reap the tax savings, like, you gotta know where your numbers are, and you gotta have the supporting documentation, because you're putting yourself at audit risk if you're just trying to put stuff on the books that you don't have any supporting documentation for, or you may be missing deductions because you're trying to just keep paper receipts all over the place. Like, leverage technology, leverage experienced bookkeepers. I think the main thing is just having like your books in order, your financials in order. That's going to help you with getting financing. It's going to help you getting your taxes filed in a timely manner. And you have a general idea, okay, which investments are working for you, which ones are not, just based off of how they're operating, instead of just scrambling at the end of every year, as a lot of people do, because it's something that is like, it's not a sexy thing. Accounting and taxes aren't the most exciting thing, but that's where, like, maximizing technology like a QuickBooks, or maximizing solid bookkeepers, virtual assistants that can help with that, goes a long way. You can't really see those as expenses, like those individuals, and that technology is actually an investment to yourself and to your business, so that you can do more. And okay, here's how we operate here, or we need to go ahead and offload this property because it has not been operating as well. And it's a good time to sell, so forth and so forth. Especially, like I say, if you're trying to sell off properties and the buyers want to see financials, you need to be able to get that to them at a timely manner as well. So it's always stuff to kind of keep in mind with keeping the books in order, not just from a tax perspective, but actually running your business and how you're going to invest going forward as well.
Okay, sounds good. Sounds good. And ladies and gentlemen, as I plugged before, I'm going to plug that also. Get a consultation. You know, if you go to that link on there, you're going to have choices for like a consultation on there, and he's going to give you, because everyone's situation is not the same, and he'll adjust from there. Am I correct?
Yeah. Everyone is there. Everyone's snowflake in this whole manner. So it's like if you're a flipper, then the whole strategy and stuff is completely different for someone who has five rental properties, or a real estate agent or a wholesaler. Like, you have to just and that's the part of finding the right advisor for you, and whoever it is, grateful if it's us. If it's not, like I said, we got referrals from others, but whoever it is, they gotta get to know you, your situation, your goals, so that they can properly assess. Because I could just throw out a whole bunch of strategies, but if it doesn't align to who you are and what you want to do, then you're not really going to follow the advice. So it's let's make sure you're connecting with those who are taking the time to understand what you're trying to accomplish.
Okay, awesome. Well, hey, Mr. Larry, appreciate your time and the intro on what you do and what you got going, and we got to get you on another episode. I look forward to seeing you on another episode soon, because we're going to do a deep dive in this, because we're talking the same language, brother. So, any last words?
No, definitely appreciate you, Nick, for bringing me onto your podcast. Hopefully this is value to your listeners.
Yes.
They got all my contact information. Looking forward to anyone that wants to reach out to learn more about us or how we can serve what they have going on, and looking forward to building from here.
All right. There you have it, ladies and gentlemen. And I'm going to see, as I always end, and I've said it before, don't condemn, don't complain, because you have a choice to make a change. Have a great day. Thanks
for joining us on the Nicholas Brown Podcast. Make sure to visit our website,
www.nicholasbrownrei.com,
where you can subscribe to the show in iTunes, Stitcher, or via RSS, so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes. Or if you'd simply tell a friend about the show, that would help us out too.
If you like this show and you're interested in retirement planning tips, then check out our free newsletter located on our website, www.nicholasbrownrei.com/newsletter.
Be sure to tune in for our next episode. And remember, don't condemn, don't complain, because you have a choice to make a change. Have a great day.